Good morning. Thanks for joining us this morning live at 9 o'clock. ATI ProMedia, powered by Advanced Trading, talking your grain and livestock markets every day live at 9. Thanks for joining us here this morning. We got a little green on the screen. The corn market and the wheat market are grinding higher, bouncing back. It's good to see. Got a few headlines out there. We will roll through them and get on with your day. So let's go to your markets first, and then we'll roll through the show. Looking over to your May corn. Let's jump over to July corn. July corn's up 6.5 cents at 476 and 3/4. July beans are down 8 cents at 1044 and 3/4. New crop Nove beans are down 5.5. I skipped over new crop Dees corn. Gonna go back there, up 2.5 cents at 447 on your new crop Dees corn. Soy oil is down 60 cents at 48.74. Soy meal is bouncing back at 50 cents higher at 298.70. Looking over your wheat markets, we got July Chicago wheat up 7 3/4 at 533. July new crop KC wheat is up 4.5 at 535.5. Looking over your cotton market is down 58 points at 67.71. Feeders are giving some back. Feeder cattle are lower by $1.80 lower at 295.12 on August. $1.20 lower on the May feeder contract at 292.80. The index gained $1.40 yesterday at 295.14. Over at your live cattle, we got live cattle 20 points weaker. April's 216.15, and June is 37 points weaker at 209.82.5. Lean hogs are weaker as well. A lot of red on your meat markets here this morning. June hogs down 37.5 at 99.15. Crude oil is 84 points lower, below $60 a barrel. June crude 59.59. Heating oil, diesel is down 3 to 4 cents at 208. Nat gas is down a nickel at 333. The Dow is down 700 points. The S&P is down 112 points, and the Nasdaq down 400 points. There is blood in the water in your equity markets once again here. But we had a big win in ag markets here. Again, back-to-back export flashes. We love to see these each day. So we had an export flash of 120,000 metric tons of corn to unknown destinations. That follows yesterday's export flash of beans and corn. So good to see these back-to-back out there. Indicates demand, and corn is the number one. U.S. corn's the number one game in town globally. So good to see it continuing out the door. Macro market headline, one of the bigger ones here today, Ukraine ready to sign U.S. resource deal in a matter of hours. That's out by the Wall Street Journal. Media outlets reporting that Ukraine's ready to sign a U.S. resource deal. I'm going to get my notes up and talk through a little bit of this here. Negotiations over the deal, which will allow U.S. privileged access to new investment projects to develop Ukraine's natural resources, including aluminum, graphite, oil, and nat gas. Minerals and energy has been in the works since February. The Ukraine cabinet is prepared to approve the deal, which will need to be ratified by the country's parliament on Wednesday. So more details to come on that deal. But one of the things that stands out a little bit is if the U.S. gives military assistance to Ukraine in the future, the cost of that assistance will count towards U.S. contribution to the U.S. Ukraine fund. So U.S. military assistance is now deductible in that minerals deal going forward, if it all comes to fruition. So interesting piece of the puzzle there. We're still waiting on peace. I think Trump administration is very frustrated with the lack of a ceasefire, the lack of a peace deal on that front, but the U.S. resource deal is a big piece of the puzzle coming into place here. Headline there. All right, grain markets were ugly yesterday. We had more sellers than buyers, and corn broke some key moving averages out there. We'll look at some charts here, but first I want to throw up some month-to-date performance as we wrap up the final trading day of the month of April. And some key things out there to look at. The VIX, just an outlier up there. Volatility index up 48% on the month. We've seen lots of volatility in your equities, and the VIX is indicating that, up 48% here. Orange juice, canola, soybean oil, coffee, cocoa, the gold, the euro, yen, lean hogs, cattle. One thing that kind of surprises me, though, is corn. Even corn is a net winner on the month, up nearly 2%. July corn, when we started the month, when we exited March, July corn was at 463, and here we are, 475 on July corn. So despite the recent meltdown in your corn market, corn's still positive on the month. So interesting to think about. It's all about the most recent price action, though. So we get a little recency bias there. Losers for the month here: the NASDAQ, the S&P, wheat market, cotton market, the U.S. dollar, heating oil, energy markets, your heating oil, crude, nat gas down 21% there on the month, according to this graphic. So we'll see. It's month to date, and we're not quite over yet. So we got another day here. We'll see how things settle out today on your month to date performance. Let's look at a few charts here while we're talking markets and price action. I'm going to pull these charts in, possibly. Let's look at July corn first. Add this to the stage here. Enhance. July corn, giving a little bit back. Yesterday's sell-off broke the 100-day moving average, the 50-day moving average, bouncing back up today, testing that 50-day moving average, 478.5. We're 476 currently, backed off of it, hit it and pulled back. Got the 200-day moving average below us at 460, 61 area. Watch that level. That's a key area to hold, has been support in the past. We want to see that hold going forward. But RSI, don't always highlight this technical indicator, but not quite in that oversold territory, still kind of in this middle ground. So there's definitely some downside risk here in your corn market down to that 200, and looking at that RSI not being oversold quite yet. Let's look at new crop while we're at it. New crop corn futures, they actually, a little different chart here, broke the 200-day moving average yesterday, tested it the day before, broke it, bouncing back, trying to hold that, put a new recent low in for the move. We got some air underneath us here down to that end of March low. What was that? 436.5 on your end of March low. So some air down there. On new crop corn, we could continue. Don't underestimate how much these markets can move and how things can change. We've seen a significant price range. And just looking at new crop corn, we traded up there in that 480 area and currently 446, so significant moves there. If we want to talk big moves, though, we got to look at wheat. I want to pull in this new crop KC wheat. We broke these recent lows here that I had on that line there. Broke down below that last week. We've seen a $1.26 range. We traded, I think, 653 on February 20th, 19th, and now currently trading 536, bouncing off that low, but put a low in of 527. So $1.26 range here in just 2 months time frame. This goes back to that where I highlight manage the dollars, not the dimes, guys. When we're looking at these markets, it's not about nickel, dime, quart 25-cent moves. It's about managing the dollars in these markets, not the dimes. So get those charts out of here. Oh, but first, wait, there's more. We got to look at cattle, because cattle are up and away here. Giving a little bit back today, but up and away. Look at that strong cattle chart. 250 seemed like a good deal. Here we're knocking on $3 in the August contract out here. Good to see. Index keeps grinding higher, but up and away in your cattle markets. I'm going to yank these charts out here. See if I can go back solo mode. All right, up and away. Bulls have been winning in your cattle markets. Markets, though, they have a funny way of humbling those who try to outsmart them. So options, buying a 250 put in your feeder cattle and watching the market go to $3, that's a good thing. Makes that $4, $5, $6 put option that is expiring worthless seem much cheaper than managing a $50 margin hit in the face of a bull market. So if you're going to use straight futures without the flexibility of optionizing against them, you got to be prepared. They work the same going up as they do going down, and options are a good way to embrace a bull market and give you flexibility to manage a moving market. So no one knows when this party is going to end. Defend your equity and position for future market volatility out there. You got great time to be managing risk in the cattle business, and I've been doing a lot with LRP. Encourage you guys to look at LRP. Great foundational risk management coverage for anything you're running this fall on grass, your calf crop that you're going to wean next fall, even looking out to your next year's calf crop. You can go out there and do some things for calves that are going to be born January, February, March timeframe next year. Don't hit the snooze button and let those opportunities dwindle away. So when we think about bigger things in the cattle market, chain speeds are starting to slow down a little bit. We got lower slaughter rates, which tightens retail supplies and pushes boxes higher. Ultimately, in this cattle market, where I feel where we are at right here, right now, we are going to test the strength and resilience of consumers going forward. Eventually, high prices cure high prices. It's great to be a bull, but we're going to test how high the consumer is willing to pay for beef this summer. We've got green grass and grilling season firing up right around the corner, and we got a hot beef market right now too. So I love beef. I want a bull market in beef, but I know the party ends eventually, and I don't want you to be the last one holding the bag. So manage risk when you can, not when you have to. Got a lot of headline risk out there. How strong is the consumer? How strong is the American economy? The Wall Street Journal this morning reported we had first quarter GDP out, and the U.S. economy contracted 0.3% in the first quarter. The reading fell short of estimates. The decline in GDP reflected some front running ahead of the tariffs. It's January, February, March. Remember, we had Liberation Day, April 2nd. So the tariffs didn't technically go into effect until April 2nd, but we had some front running ahead of that. Imports surged 41.3% in that period, and exports only rose 1.8% in that first quarter. So that's that first quarter GDP is the first scorecard here as we transitioned hands in the White House and start this new trade tariff war deal. A lot of uncertainty about the U.S. economy, a lot of uncertainty about the health of the U.S. consumer ahead. Are they going to have to make tough choices of where they spend their dollars and how they spend their dollars? That's why I want to hammer that home here for you involved in the beef market. And keep in mind that, yesterday we had a headline where UPS cut 20,000 jobs. So these headlines, they just keep coming. We had an ADM headline this morning where they cut jobs at their global trading desk. Remember back earlier this summer, they announced they were going to, reduce their workforce 600 to 700 people. Efforts to go in cost savings. We got Doge across the country. We got Doge in all these private companies, public companies. Everybody's looking at cost savings and efficiency. And are you doing the same things in your household at home? So that's what I'm going to leave you with, guys, here. Unless there's any comments out there, we'll pull a few comments in. Tony Dunker. Tony, I missed you yesterday. We got to get you back on here. I know you got words of wisdom to share with us, but great time for LRP. Absolutely. Need to be looking at it. And then if you have LRP in place, it's a great time to manage that and protect more dollars. If you bought 250 LRP, how do you cover that gap and raise that coverage up? We can talk to you about that. We can teach you to do that. Nathan Russ Farms watched more than 100 pairs of first calf heifers pairs sell this past Saturday for $4,600. Wow, that's hot. That's firm. It's pretty good in the beef market. I wonder when those heifers will pay for themselves. If this market holds together, they could pay for themselves pretty quickly in a couple years. But if it falls apart, you don't want to. You paid a lot of money. Somebody paid a lot of money for those animals, and you got to do your due diligence and risk management if you're spending that kind of money on those types of pairs. Farmer Brett, let's pull this one in here. I'll let you click it. Farmer Brett, with these grain prices, I'm thinking I need to start a side hustle of some sort. Any ideas? Oh gosh. Well, I don't have any great ideas for you. It's, side hustles involve a lot of work, but there's a lot out there. I think people our age, side hustles are a big thing. So yeah, all for it. We can talk offline about some of those ideas. I know farmer Nathan Russ, he's got some a lot of side hustles happening too in his life too. Appreciate the comments. We'll see where these markets settle out this week. We'll be back tomorrow, and Thursday we'll have export sales out in the morning. Had some PCE, the Fed PCE data. I think that's supposed to be out here at 9:00, so it should be out. I don't have a breakdown on it for you, but that'll be something the macro market's watching here out of the gate. But thanks for joining us. I'm going to get out of here and manage some positions as these markets are moving and creating some opportunities for guys with. You can't show that comment from Nathan Russ, but that's hilarious. That's hilarious. Good stuff. With that, I'm out of here. We'll see you guys. Have a fantastic day.